Why don't we see more banks fail due to the obvious overextension of commercial lending and commercial CLOs tied to them? On the heels of New York Community Bankcorp downgrades to junk status by both Fitch and Moodys rating agencies, as well as CEO leaving the bank blaming the lack of oversight for the current values of the commercial assets. The question remains on what happens to peers of the commercial bank segments. So first, let's take a look at the 10 publicly traded banks with large risks due to the commercial loan exposure. S&P Global and Bloomberg put out a nice report on percentage of commercial loan growth and the risk level, and actually one bank stood out from the pack. Dime Community Bank with the CRE asset growth over 263% in 3 years. The stock is down 40% in a year already. And let's take a look at Bank of OZK exceeds 100% capital by 237% for construction and development loans. Let's now take a look at the breakdown of the debt maturing. Based on the MBA research, the depositories, which are mostly banks, have the biggest percent increase for maturing debt in 2024 versus 2023. And some maturity dates from the debt from 2023 was pushed to the later years. 441 billion, 25% of the outstanding mortgages held by depository. To put things in perspective, the New York Community Bank had the earnings announcement and adjustment due to the markdown in the fourth quarter of 2.4 billion. So what about the other banks? Have the similar experience or exposure? I'm sure they are. Looking now at the types of CRE debt maturity in 2024 by property type, 20% of mortgages backed by multifamily, they're okay. 17% of those backed by retail, not so much. 18% of healthcare properties, that's okay. 25% will come due on loans backed by office properties. And then 27% industrial, have no idea what's going on there. And 38% of hotels and motels loans. So office properties are 25% of maturing loans. Based on that ratio and the fact that the current mark-to-market to the office property is really 50 cents on the dollar market trade value, the asset adjustment should be over $100 billion in 2024. So New York Community Bank was 2.4 billion, which means that we should expect 100 billion total adjustments this year by other lenders. Q1 reporting should be a very rocky for lenders, and yes, more lenders will end up in the junk status. So we will be monitoring closely on what comes out from the commercial banks and how their exposure will translate to the stock market. For more banking and finance analysis, don't forget to subscribe to my channel below.